Hello everyone and welcome to Conversations with the Dean. I'm Attorney Stevens, Dean of the College of Business at Lipscomb University, and my guest today is Bill Nigh, who's the CEO of the Bank of Nashville and also the regional CEO for the state of Tennessee. Bill grew up in Texas. He graduated from Texas Tech University with a BA in finance and then later attended LSU to get his master's of banking. With 30 years in banking, Bill has spent the last 20 with Synovus Financial Corporation, beginning first at Columbus Bank and Trust. In 2000, he was named Senior Vice President and Assistant to the Chairman of Synovus Financial Corporation. His leadership role got him promoted to Chief Operating Officer of First Commercial Bank in Huntsville, Alabama. Prior to moving to Nashville in his current position as CEO of the Bank of Nashville, Bill was President and CEO of Synovus' Trust One Bank in Memphis. Bill finds time to serve on the boards of the Arts and Business Council. He's a member of the Nashville Area Chamber of Commerce Business Conditions Council, lead investor counsel for the Partnership 2020, and was a member of the Leadership Nashville class last year. It's great to have Bill Nigh as our guest today. Now, the Bank of Nashville, Bill, is actually a subsidiary of Synovus Bank, which is a much larger financial institution. In fact, I was really interested as we were preparing for this interview. You told me that there are 11,000 financial institutions in the United States. Compare that maybe with 6,000 hospitals and 4,000 universities. Are we overbanked in this country?
That's a great question. Overbanked is probably a matter of perspective. I think the bankers would tell you that there are too many banks. The competition is very strong. It is certainly challenging for us in the industry. And in the end, competition is very good. Is there too many? I think most of the bankers think there is too many.
So how did we get too many banks? These are all regulated institutions. You can't just start a bank. You have to be approved by the state or by the federal regulators. How did we end up with so many financial institutions in the United States?
Well, I think it probably has its really beginnings a long time ago. And in fact, if I remember my numbers right, at one point I think there were over 20,000 institutions. So over time, as the industry has consolidated, that continues to be whittled down. But I think I just saw some in the last couple of weeks. I think Germany has less than 1,500 institutions. Other big countries in Europe have a couple hundred each. There'd be a question in my mind of, is that too few? But if you look at the beginnings of banking, it was a very personal, local, relationship-driven industry. So I think that is really what created so many banks, is every town thought it needed its own bank and probably did need its own bank. And then when you get the consolidation and the acquisitions that we have in our industry really had a lot of over the last 10 or 20 years, a lot of times people who were displaced would go start their own bank. And while there is certainly a qualification you have to go through, generally if you had enough capital and you had good experience, that you would be granted that.
Well, let me turn the question around the other way then, and let me approach this not from a standpoint of whether we're overbanked, but let's talk about too big to fail. We've heard a lot in recent years about the banks that are too big to fail, and the general thinking process was that we had been too consolidated, that certain financial institutions had gotten much too large, and we had too much concentration of assets in too few institutions. So is it a good thing that we do have all of these community banks? Is it a bad thing that so many of them are really small as compared to the too big to fail institutions that dominate?
Right. I do think a lot of banks certainly are at a competitive disadvantage. That being said, in so many communities, these really large banks aren't going to serve a smaller community very well. So there's a real value to having local people who know you individually or in your business and are focused on that community, because not only are we serving the needs of institutions and companies and individuals, we also, the history of our industry is we invest in the community. So many times we're the leaders for the chamber, we're the leaders for a lot of nonprofit, we are helping raise money, and we have a history of doing that would be difficult to duplicate in a too big to fail huge institution.
Your parent company has taken a bit of a different approach to branding than some of the financial consolidators have. Many of the larger banks change the name when they buy a bank in the local community to the brand that they want to identify for the whole chain. In your case, your parent, Synovus, which I believe is based down in Alabama, allows the banks to have their own brand in each market. For example, here, your bank is branded as the Bank of Nashville, which it's been since it was founded a number of years ago. Why has your parent company taken that approach?
It goes back to a lot of this conversation we've been having. Our model is we have bought institutions where we believe in the management, where we believe in the board, and we believe in the community. And at the very early stages of our company, we really bought somebody and left them alone because they had a strong history of growth and profitability. We didn't really want to mess that up. So over time, as we got bigger and bigger, you certainly have a different regulatory environment and requirements. You have efficiency opportunities. So we've tried to do everything we can to make us as efficient as we can, while at the same time leaving the decisions that affect that bank in the market with very strong leaders. So in one respect today, although we are Synovus Bank, it is a symbol that we run our bank different. We're the 40th largest bank in the nation, but we're different, and that's the sign that you're dealing with decision makers, you're dealing with people who our company's really relying on to make a difference.
Well, I want to talk about the Bank of Nashville and a little bit about its history, but before we do that, let's focus on the parent firm for just a moment, because it's interesting to me that Synovus has about $30 billion in assets, I believe, if my research was correct. And in fact, you told me earlier that Synovus has the largest outstanding loan under the TARP program of any financial institution in the United States, which I find surprising and very interesting. Tell us a little bit about Synovus. How was it formed? Where is it headquartered? And how in the world did you come to have the largest TARP loan of any bank in the United States?
Well, we've actually got a great history. Our company is celebrating its 125th anniversary next year, and we really started with an act of kindness. We're headquartered in Columbus, Georgia. There were a lot of mills in that part of the country, and the way our company really started was in one of the mills. One of the lady workers who was operating a machine got her dress caught in the machine, and money fell out of the hem of her dress. And a couple of executives went up and said, you know, what's this money? And she said, it's the safest place that I can have. And they offered to keep her money and pay interest in the company safe. And those executives ended up starting a bank because of that act of kindness. And that has really been a part of who we are, because we are a very people-focused. We believe in people, and we believe in doing good. So it's really a great history. It's a proud story that a lot of us tell. So over time, we've just evolved over those 125 years. We were one of the first banks to acquire banks in Georgia. Again, we're headquartered in Columbus. We today have 30 divisions. And how we became the largest, have the largest money outstanding on a TARP is the banks who took more have paid theirs back. So we have a little under $1 billion outstanding. We are going to pay it back. We have paid over $160 million of dividends, and we have publicly said that most likely we will be paying that back next year. And it gets very complicated about how and when you pay that back. We want to do that in a way that really works for our shareholders as best as possible, and it works for the regulators also.
Do you think in retrospect, Bill, that the TARP program was a good thing for the United States?
I do. I personally have mixed emotions about it because I believe in the free markets, and I believe in that there are winners and losers. But I've also done a lot of research and talked to a lot of people, and I do think we were on the edge of collapse, and something had to happen. Because what we couldn't have is a total collapse where we went into a depression where bank after bank failed, because the ripple effect of that would have been so traumatic that if you're faced with one of those two options, this was clearly the best option. And secondly, as it has played out, the government has made money on TARP. When you look at all the dividends and all their returns, in the banking portion of it, now they also use TARP for General Motors and for AIG and some companies outside of the banks, but the banks portion has made money for the government, even if nobody else pays theirs back.
At the time that TARP was passed by the U.S. Congress, there was a good bit of general knowledge by taxpayers about what Congress was considering. That was pretty well publicized. What was not as well publicized were steps that the Federal Reserve Board, was taking to do what has now become known as fiscal easing. And just recently, in recent days, Chairman Bernanke has said that he thinks it's time for the Fed to pump more money into the economy. Do you think that's a good idea or a bad idea?
I think the easing has been important. Now, I'm not an economist, so just sitting in the seat that I do think making money cheaper, and it has been very important. Now, there is a cost to that, because to those people who have money and they're investing cash, their returns have been very small. So, I mean, that's a dear price that they're paying. So I think it has helped a lot. Will additional easing help? Again, I'm not an expert, but I would question how much more value there is, because rates are so low already. I'm sure there's some incremental value, but I do think at some point that those issues can come and work against you. And I'm sure they have a plan for that, but we'll just see how that plays out.
Well, it's interesting that there hasn't been more general outcry about the low rate of return on certificates of deposit. Many people, including my late father-in-law, invested wisely, I think, in certificates of deposit. They consider that to be the safe thing, right. And the returns were pretty good. But my late father-in-law, who died just a couple of years ago, frankly would have been in financial trouble had he lived long enough to have had to live off of the renewal rates right. of those CDs. So have you seen that affect seniors, and what do you think? What do you think's going to happen as people begin to see those CDs renewed? There's just no good option, is there?
There's really no good option. Anything that drives a higher return creates a different level of risk. So it depends on somebody's age, it depends on their risk tolerance, but I do think it causes a significant issue for those people who are in that position. And I don't think there's a solution for that over the next year or two. Particularly, the Fed has said they plan on keeping rates low for the next couple of years.
Now, the Bank of Nashville, which is the institution that you head as the CEO, has an interesting history. It was actually founded by a former mayor of Nashville, Richard Fulton. what, about 15 to 20 years
A little
ago,
over
I
20
guess,
years.
about 20 years ago. I have a particular interest in that because as a former investment banker, I was involved in raising the $22.5 million that started the Bank of Nashville. But it had a bit of a spotty history. Is the bank in good shape now? And what is your target market for the Bank of Nashville?
Our bank is healthy today. We have really worked through virtually all of our problems, and if you look at all of our credit statistics, they would rank very high and really across the nation. Our target market really is small to medium-sized businesses, and kind of financially active, a little more wealthy individuals, people who really need a trusted advisor, who need their banker to know them, to work with them, and who have a real relationship approach, kind of rather than a vendor approach.
We had a guest in the last season's episodes of Conversations with the Dean who was also president of a local bank, and I was surprised when he told me that he competed with 60 some odd community banks in the Nashville market. I guess that includes the larger banks as well. But how do you, when you say you focus on the local businessman, the small business person, how do you differentiate yourself from all of those other competitors out there?
At the end of the day, it's a people business. Banks don't really have unique products. We don't have unique loans. There may be small differences, but at the end of the day, it's a people business. So we try to find the best people in town who have a book of business, who network and who know how to get out and sell. And basically, it takes time. It's a long sales cycle, and we just try to build trust. And as we're building trust, we try to create value, and we do that through questions, through ideas, through thoughts, through maybe connecting them with other people who could help them, whether that be potential vendors or customers or just other entrepreneurs.
Now, you've moved to Nashville to run the Bank of Nashville. What's your impression of Nashville as a market? Is it good or bad?
I think it's a great market. We're in 5 states in Synovus. We're in Georgia, Alabama, Florida, South Carolina, and Tennessee. We believe Tennessee is one of our better market opportunities. If you look at the statistics, the number of businesses, a lot of the economic data, it really provides a great opportunity for us. But back to your point, there are 60 banks, and there's other financial institutions, and there are banks who want to come, so I think that number will do nothing but grow. But that being said, there's a lot of opportunity here, and the economy is pretty healthy.
One of the things that has distinguished Nashville as a market over the years has been the fact that we have a relatively balanced economy. We're not overly dependent on any one segment. And so when things go up, we may not go up quite as much, but when things go down, we don't go down quite as much. Have you observed that phenomenon since you've been here, and do you think that's a good thing for Nashville's economy?
Yeah, I think diversification is so important for really any business, any government, any economy. To become overly reliant on any one or two areas can be a hard ride up and down. So I have observed that. We see a number of different sectors of this economy coming back a little quicker, such as home building. So I think it's a great thing for this economy, and that's part of why we're here.
You're in an iconic building in downtown Nashville, or at least your downtown office is. In the L&C Tower, used to be the headquarters of the Life and Casualty Insurance Company of Tennessee. I think at one point the L&C Tower was the tallest building in the Southeast in the 1950s. Downtown is going through a lot of changes as well, quite a metamorphosis. Are you optimistic about downtown with the opening of the new convention center and all the other things that are taking place?
I think downtown's got a great future in front of it. I think the energy that is downtown through all this development, I mean, there's so much construction going on right now, and as I haven't really dug into the data myself, but I have heard a couple people say, if you really look at the vacancy downtown, it's concentrated in 2 or 3 buildings that have a significant amount of vacancy. If you look at really the rest of the buildings, that it's really pretty healthy. So I think downtown's got a great future.
Well, we're excited about having the Bank of Nashville, and as I mentioned a minute ago, I was involved in raising the capital for the beginning of the Bank of Nashville. This goes back to the Richard Fulton and Richard Chambers era when they decided to start the bank. I was running an investment banking firm called Rogers Capital Corporation for Ambassador Joe Rogers, and he came in my office one day and he said, "Attorney, we're going to start a bank." And I said, "Really?" And he proceeded to tell me that we were going to start the Bank of Nashville and that we were going to target potential depositors and loan customers as shareholders. And so, Bill, for about a year, pretty much all I did was have breakfast or lunch with a potential shareholder, but those became potential depositors and borrowers, and I guess that strategy ultimately turned out pretty well. I think we ended up with about 950 shareholders. We raised $22.5 million, and it took almost a year to do all that, so that was quite an interesting experience. Now, when all those shareholders when the bank merged with Synovus, all those shareholders, I assume, became shareholders of Synovus, which is a public institution.
And I think they all did pretty well, from my understanding, with that transaction.
Good. And I know you're limited by what the SEC will let you say or not say, but are you optimistic about the future of Synovus? If I were a shareholder, would I be optimistic about that?
I am very optimistic. I think I get back to how we run our company, and I believe in the way we run it. I think it's different. I think it's unique. I think the markets who we're really after need a banker, need somebody who can really help them. So I think the future is very bright for us.
One of the things that I've noticed about people moving to Nashville is the fact that they don't seem to leave. Quite often people in your position are asked to move to Nashville to run a business or be part of a business, and then when it's time to move on to the next stop, they just refuse to leave. They say, "No, we found the place we want to live for the rest of our lives." I assume you'll be called to greater duty by Synovus one of these days. What do you think about Nashville as a permanent place for you and your family?
My wife and I love Nashville. We've had great fortune of working in our headquarters for a long time. I was in Columbus almost 15 years. I've been with our company about 20. I was able to go to Huntsville. I was able to go to Memphis and here. This by far is our favorite place, and you know, we're hoping we don't get that call. We do love it here.
If you were going to change one thing about Nashville, since you're an impassioned observer, what would that one thing be?
You know, I think we've got to think about transportation probably a little more. I think we're going to have some pretty strong growth, and it's not hard to get around right now, but I think that can happen. And I think if we don't think far enough ahead and plan that, that could be a very inhibiting factor. And it could be a real factor for those who aren't very fortunate and don't make a lot of money if they have difficulty getting around.
And I know you were in last year's Leadership Nashville class, I believe, and I'm sure Leadership Nashville focused on transportation as a critical issue for the future of the community. So I would assume that you've studied the mayor's plans for rapid transit. Are you generally a proponent of the things that the mayor's proposing that we do?
I wouldn't say I'm a great student of that, but we did look at it, and I clearly think we have to do some of those things. So I think if we can figure out how to do those, test them without going too deep and see what is accepted, and hopefully that'd be a kind of a plan for the future and a launching place.
Okay. Well, Bill, it's great to have you in Nashville. It's great to have the Bank of Nashville as part of the community here. thank you for joining us on Conversations with the Dean today, and we look forward to welcoming you back to the Lipscomb campus again soon.
Thank you.
Glad to have you. My guest today has been Bill Nigh, who's the CEO of the Bank of Nashville, part of the Synovus financial family of banks based in Columbus, Georgia. Thanks for joining us on Conversations with the Dean. We'll see you again soon.